All right, so today we are going to look at professional consideration. All right, so professional consideration is our focus for today. And today is the day we are finishing your question 1. So after this class, what I will do is that I will start sending you questions. I will give you 2 major questions for you to do. All right, so you have to use whatever we have said to answer the question. And please, the reason why I'm doing this thing is to get feedback as to whether you've actually understood what we've been doing and your approach to answering the exam question. That's my main reason for doing this. That is what I want to uncover. Okay. Now, when you talk about professional consideration, usually there are 4 issues that we talk about. One of them is kind of a regulatory. So I take it out and make the professional consideration only 3. The last one is usually corporate governance. It's regulatory, and we did that in our very first class. Okay, so what we will be talking about today is money laundering, which came in their sitting in November. Money laundering. Then the next one will be professional liability. Professional liability. Or auditor's liability. Okay, which was also examined in March. All right. Then the last one is practice management. Practice management. And when it comes to practice management, we have two aspects of it. We have how to obtain a client, how to obtain a client, and how to maintain a client. So in how to maintain the client, we will look at quality management, what we used to call quality control at firm level. These days, we call it quality management. All right, quality management. It used to be like or quality control at firm level. Then we will look at quality control or quality management on the job. On the job. Or what we used to call quality control on the job. So this is what we are going to do today. Like I said, the 4th one is always corporate governance, which we've already done, especially the audit committee aspect of corporate governance. So, ladies and gentlemen, this thing also came in the exams in November. This one, it came in the exams in November. So how to maintain a client, but how to obtain a client wasn't examined. So in effect, they had money laundering, then they had ethical consideration for 10 marks. Money laundering almost took like 20 marks together. Yeah. To 10 marks. But instead of treating money laundering in question 1, they actually used it as a current issue. Okay, so as part of the last page, question 5. So that's how your exam is structured. All right, so now we are going to go in and discuss these 3 things, and that is our focus for today. All right, then when we are done, what we'll be doing is to try and answer 1 or 2 questions. Then I will also give you the assignment, 2 questions, then you will deal with that. All right, so let's get into it. So practice management, first one, money laundering. I don't expect them to bring money laundering in your paper, but since it is in the syllabus, we need to talk about it because they were examined just last sitting. All right. Now, what is money laundering? So, definition. We will discuss definition. We will discuss the stages of money laundering. All right. Then after we've discussed the stages of money laundering, What the next thing we will look at is the auditor's responsibility. All right, the auditor's responsibility or audit responsibilities. Towards money laundering. So basically, that is what we are going to learn now for money laundering. All right. Okay, so let's start. What is money laundering? When you talk about money laundering, it is a simple concept. We are looking at the process by which criminals conceal the true source of their illegal revenue. So they have illegitimate monies, but they don't want anybody to know. And please, I will be using some example, allegedly, but not political. All right. So the process by which criminals attempt to conceal, and that is the word, conceal. Conceal means to hide. All right. To hide the true source. All right. Of the true source of their illegitimate funds. All right. And make it look like it's from a legitimate source. So basically, that is what money laundering is. Okay, so you hiding the money, the true source of the money, all right, so that people would think it's actually a legitimate money by Azankwa. All right, then the typical example, and I think the reason why you guys had it in your exam, and that is the example I used, was because of what was in the news about our honorable Dapa. Right now, up to now, most of us, we don't even know the source of that $5 million. We don't know how. We don't know. So that brings it into the discussion of money laundering, because we don't know the source. And it's like we have to believe a story to understand the source. But if you get your salary and everybody knows that the money is from your salary, there is no debate about it. It's as simple as that. All right. So that is what money laundering is about. Now, so we all know what laundering means. Everybody launders. Like you go to laundry, you wash your things. So we are trying to tell you that we are washing the money to make it look nice, to make it look clean. So a dirty money that is being washed to look what? Clean. So if you don't remember any of these things, just understand what laundering is about. So all that you are doing is that you are actually washing a dirty something, and here is money, a dirty money, to make it look clean, and that is money laundering. Now, let me give you a typical example. When you breach health and safety regulations in order to save money, it makes your company a money launderer. You breach health and safety regulations, all just in the process of making money. So what you are trying to do, you are doing cost savings and all those things. Please, all those things is a crime you are committing, especially in the engineering field. They don't take what do you call it, health and safety for granted at all. So when you do that, then it means that you are also breaking a law to actually save some cost, and that is money laundering. Now, the person who launders the money actually have a problem. The problem is that the money is huge. So they are holding proceeds of a crime in cash. Now, the thing is that they have the risk of being caught. So if they spend the money, spending the money becomes an issue. Right now, I'm teaching here. Do you think if I have $1 billion, I'll be doing this class in this evening, and it is Christmas? I'll tell you people that go and sleep. Me too, I'm going to enjoy. So that gives you a picture of this guy he doesn't really have money that much. Now imagine I have $5 billion. Now all of a sudden, I start buying a Ferrari. I start buying a Rolls Royce and all those cars. That one will kind of create a picture of this guy, or Abokrono. That's how it will be. So that is the problem of the person who launders the money. So now that I have $5 million, then what do I need to do to make everybody see that, oh, okay, he had the money from a legitimate source? Well, there are certain things I can do. I can decide to open a betting company so that when you come and bet and you don't win, it mixes up with the money that I already have. And so I can tell you that 200 million or 200,000 people take the bet and now they didn't win. So that is the money that I'm having. So I can spend small. So those are the things that can come up. And we are going to learn certain things out of that. So that is money laundering. Now, there are 3 stages of money laundering in the criminal's bid to actually wash the money and make it look clean. The first one is placement. First one is placement. Now, what is placement? Placement means you are putting the money somewhere. All right. So you are getting rid of the cash in exchange of something else. That is what we call placement. That is what we call placement. You are getting rid of the money, all right, in exchange of something else. So in many ways, this one, you have to find a nice way, a nice place you can actually put the money. Okay, so you have to find a place where, okay, if I put the money in, it won't raise suspicion. Okay, so that is it. So that is the first thing the money launderer wants to do. Wow. So it's either the person digs his room and put the money there, or he goes to the bank and put the money there. But the danger is that if you go to the bank to deposit a huge sum of money like that, it will raise an eyebrow. So what would the person do? So most of the time in your exam, what you will see and the possible method possible situation that you will see the person doing is that they will change the money into a different currency. That is what you spot in your exams, that the money is being changed. Money is changed into a different currency. That is placement. And in the exams, I think that is what they had. They had a scenario like that. The money was being converted into dollar, into dollar, into dollar. So that is it. You change the money into a different currency. Why? Because imagine I steal 20 million Ghana cedis and I now convert it to dollar at a rate of, what is the dollar rate now? I learned today is like 11.5 something. So let's say it is 12 cedis. How much will it be? Yes, somebody should punch calculator. You will see that the value will be low. Yeah, it will be low. 20, somebody should punch calculator and give me the value. So that is what it will be. So these are one of the, so that you see that you are using the huge sums of CD has become a little amount of dollar. Yeah, because the dollar is doing well. And that, with that, the person cannot deposit the money in a foreign bank. Please, who is getting me the figure?
240,000.
It's $240,000.
Yes.
So now imagine $20 million has become 240,000. 20 million Ghana cedis has become 240,000. It's a small amount, and that the person would deposit the money in a foreign bank account. And this one is the clear one they had in the exam last sitting. That is what they had. So this is placement. Another way the criminal can actually deal with the money is, apart from putting it in a changing the money into a different currency and depositing it in a foreign account. Another way of doing that is actually to place bets with it. Placing bets. Because for bets, when you win, hallelujah. So the person can say, oh, I won a bet. So that is that. That is it. Most of the time, that is what people do. Then the last one is that you will see in the exam question, they are doing more cash sales. Cash sales. Everything is cash sales. So you read the story, you will see that 75% of their transaction is cash and all those things. That one should bring to mind what we call placement under money laundering. So you saw, I don't know if anybody here wrote that paper. You saw that is what they did in the paper. That is what they did. Stage two of money laundering is what we call layering. Layering. Now, what is layering? Layering is a very simple concept. Very, very simple concept. Now, it's like building a segmentation and maneuvering the thing. Like you do so many transactions, you segment so many transactions so that it becomes very difficult to trace the original source. So what you are doing is segmentation of transaction. To make the original source very difficult to trace. So that is what is happening. The person now, imagine that I have stolen big money. I now put the money into a company. All right. I give the money into a company, like probably a company that I've created. I put the money in today. Then tomorrow, I pay myself bonus. Then I use the money to go and, do something else. So it looks as if, the money that guy is spending is actually his bonus, but it's not his bonus. Another way is that the person will deposit the money into one account, remove it and deposit it to another account, deposit it into this account. So the person is circling the transactions. It goes here, goes there, goes that, go like this, like that is how it is. So it's like move here, come here, move, come to this side, move here, go here. So once the thing is so, it's so kind of when we were in senior high school, we learned something about rocks. There was one of them that is called segmented rocks. Yeah, it's like it builds on one another. So that's how the transaction looks like. So it's very, very difficult for you to know when did it all start. So that is what layering is about. That's what layering is about. Then the last stage is what we call the integration. Now, integration is simply when the money has been washed clean and now it becomes safe for you to consume. At this point, the money is clean, then it becomes safe for you to consume. So once the person moves the money, shifts the money like that, nobody sees actually what is happening, then it becomes clean for the person to use. Like our politicians, they won't steal the money for you to know that they've stolen the money. It will go into contract. They will take their cut. That's how it is. So these are things that you should always spot in the question. The main examinable question is always here. It's always here and the layering. So that is where the main examinable question is. Now, in all these things, we know that people launder money. In all these things, what is the auditor's job? What is the auditor's responsibility? Why is the auditor supposed to know about all these things? Anyway, the truth is that in the past years, it has happened so that auditors audit financial statements. How many of you heard of Silicon Valley? How many of you heard about it? Silicon Bank. How many of you heard about it? The day after they audited the financial statement and released the audited financial statement, the next morning somebody bought the bank at £1. Did you hear that? Did anybody hear that thing in the news?
No.
Hey, and there was one news on. You people didn't hear that Silicon Bank, it was worth for £1. But the financial statement that were audited actually said it was true and fair. So what happened? Who's that? All right, so that is what happened anyway. That is what happened. So, and how many of you heard of, I think, Enron and Arthur Andersen there? Everybody heard of it. Anybody who did business in university heard about Enron and Arthur Andersen. And if you didn't hear of all these things, you heard of Capital Bank in Ghana. And then also Anyway, so now auditors has a serious, they have serious responsibility when it comes to these things. And that is where your job comes in as an auditor. Now, for an auditor has an obligation. So first of all, we look at the auditor's obligation. The auditor has an obligation. And what is his obligation? The auditor has the obligation to do what we call know your client. Every auditor is supposed to know his client. You have to know your client. Okay, the auditor has an obligation to know their client. And then not just to know the client, you have to know the client and the sources of revenue of the client. You have to know your client. The auditor has the obligation to know the client. All right, and that one is regulated by ISA 315, understanding the entity and its environment. That is what the audit standard talks about. Understanding the entity and its environment, ISA 315. You cannot go straight into auditing somebody without not knowing the person. So actually, the principle is that you look at the client as an individual. As an individual, you have to check the birth set of the person. Birth set is very important. Check whether it coincides with, now we have 10. So check. Also check for SNIT. Check for all these things. You have to check. If the client is an individual. If the client is a company, hallelujah. You have to know the board of directors. You have to know the shareholders. You have to know the management. You have to know them. You can't say you don't know anybody. If the client is a trust, you have to know the beneficiaries of the trust, the trustee. Okay, you have to know the beneficiaries. It's very, very important. You have to know your client. All right, that is it. And again, not only that, now that you know your client, what you are supposed to do, these are practical things the auditor is supposed to do. So this one, we call it a customer due diligence. Know your client, KYC. Know your client. It is also called customer due diligence. So it is a key thing that the auditor has to do, not just knowing the client. Like I said, you have to know the client and also the true source of their revenue. You have to know the sources of their revenue so that no. So not just knowing the client, you have to also know what? The sources of their revenue. So now, ladies and gentlemen, like the reason why I told you they examine that thing. Our honorable madam is a minister of sanitation. What are the sources of her revenue? The sources of her revenue is that she's a minister. She is paid as a normal person, as an executive. Now, if you calculate how many years does a person has to work before the person can get $5 million in Ghana, how many years? I think she became a minister. I think probably Kufuor's time she was working, and maybe Nanado's time too, she's working. But if you calculate all those money, will she get $5 million? That is the huge thing we need to ask ourselves. And up to now, we all don't know what is and what will be. Yeah, that is the sad aspect. That is the sad aspect. So that is it. You have to know your client. Number two, what an auditor is supposed to do is to appoint in their firm, appoint a money laundering reporting officer. All right, MLRO, money laundering reporting officer. Now, this person has the job, okay, in the entity to actually teach people how to suspect money laundering. All right, and he is a money laundering reporting officer, so he's a partner. He has to be a partner, all right, of the company, like a partner in the audit firm. All right, so that all the reports, all the suspicions of money laundering comes to him or her. So you have to appoint a money laundering reporting officer in your firm. It's very, very important. So know your client, appoint the person in your firm, which is very, very important. All right. Now, again, you have to train your staff on money laundering processes. All these things came in the exam. Train the staff. Okay, you have to train your staff, all right, in the money laundering processes. All right, so that when they spot suspicions of money laundering, then that is it. Okay. So now, when you appoint the money laundering reporting officer, you train your staff, then it means that you have to report internally. If you suspect money laundering, internally, you have to report that thing to the money laundering reporting officer. But externally, you have to report it to the regulators, i.e. IOCO, ICAG, and what not. All right, so you have to report it. All right, very, very important. So please, it is said that when you suspect money laundering, please do not tip off the client. So on suspicious transaction, don't tip off the client. All right, no tip off. Please, no tip off. Please, who is that? No tip off. Don't tip off the client. Don't go and ask the client questions for him or her to know that, this one, the person is practicing money laundering. No. All right, so that is that. Okay. So ladies and gentlemen, this is the auditor's obligation. It's as simple as this. Now, in your exams, what you need to know is that when you want to spot money laundering, now, and this thing, when I saw it, I called it suspicious transaction. In fact, I taught the thing, and when the exam came, it was there, like Yagani is there. That these are things you see in the exams that should bring to you play that there is money laundering. Number one is that, and I think I've already talked about it, that the transactions are passing through so many companies or so many countries. Transactions passes through so many companies. They are just trying to make it cumbersome. So many companies or countries. Please, the stages of money laundering, which one is this? Transaction passing through so many companies and so many countries. Yes, which one is it? Is this? And normally, obviously, that transaction could have been done through just one account, and it will be okay. But they will do it, pass it through so many companies and so many countries. Which of the money laundering stage is that?
Layering.
All right. I think we are getting somewhere. So if I show, unfortunately, their paper, I have it as a scan document. Or full question, and you bring it, so you feel like, shit, I should have registered for this thing last 18 and pass it once and for all. That is one. Now, another one is that you have multiple small transactions of similar nature rather than one large transaction to cover everything. Multiple small transactions. of similar nature. Now, that transaction could have been done one time. Which stage of the money laundering is that?
Placement.
Okay, yes, who else?
Sir, please, it's layering.
Oh, this is layering now. Yes, any other one? Yes, one. I need the winning, I need the final score. Yes, who else? Yes, please, guys, let's be fast. Yes. Ejapaye.
I can say it is the placement, the first stage, because here small transactions of similar nature, like instead of them to make the transaction one, they will just make it small. So it will be placement, the first.
It will be placement. I see. Yes, who else? Who else, please? Some people have joined.
It's layering.
Whereas in tier 1, layering. Actually,
layering.
It's layering. There's no difference between this one and the first one that we just mentioned. All right. Number 3, cash-based transaction, or majority of the transaction is cash-based. Yes, which one is that? Placement. So you see, these are things that you can spot, all right, in the money laundering activity. So that is that. Now, let me bring this one into play. Of course, I can show up some example. I think let me bring up an example for discussion. It's just an example for us to actually just have a discussion. So guys, just hold on a bit. Told me that. Okay, I think somebody is saying he has posted the 2023 November question on your page. Can you access it? Because that would be a nice one to use as when we are done, to use as a case study. So check on your WhatsApp platform. Probably you will get SND. Hey, why is this thing freezing? Interesting. I'll share the question here myself so that you have a feel. Oh. All right, I think we are back on track. So, ladies and gentlemen, these are things you need to check. Now, I asked the question. I was asking the question that which accounting standard can you actually connect to what we are doing? Which accounting standard is that? Yes, which accounting standard is that? And we will get to, when we start next week's class, that is where we are going to get to. Whatever we will be learning, we'll have to have a connection with an accounting standard. So those of you doing corporate reporting alongside, that is where you get some kind of an upper hand than anybody who is not doing it. But we will teach it here anyway, so no problem. It's just that don't expect that I will be teaching standard as if it is a corporate reporting class. That one there, unfortunately, it can't happen. But I'll give you some glimpses of it. And most so we will try and connect each case that we will do to the standard. So this one, what you can see clearly is that it's against IAS 1. IAS 1 talks about going concern. Now, all these things you are doing, if a business is into this and the business is caught, which means that there's a likelihood that regulators can lay hold of the entity and the company will actually not be on a going concern. So basically that is that. So please, at this level, you have to try and open up your mind and think wide, all right? It helps. It helps very much. All right, so that is that. Now, the last thing I've added here is politically exposed person. These people are the most dangerous people. You see, before they get into politics, they have nothing. All of a sudden, the person becomes a member of parliament and hell break loose. V81, V82, company A, company this, company that. All these people who are connected to politics, if they come in your exams, they are suspicions to money laundering. Please, if you don't know anything, you know City Adapa case. You know that politically exposed person. So please take note of that. All right. Okay, so one of our good friends says that he has put the question on the platform. So let me just open it up. Why is this machine slow like that? Eh? Yeah, this is the same thing I have. Oh. I thought you were giving me the PDF rather than scan. I also have this. But anyway, let's just go through it. I hope you can see it. Please, can you see? Is it okay? Can you see?
I will manage.
Yeah, there. You have to manage. It says that you have commenced an audit of Atika Limited, a company involved in. Somebody is asking the question is on which page? Please, this is the ICA question they did though. Last sitting. And what the person just is question 5. So I can't tell the page that much. It's question 5 of the ICA paper they did last sitting. All right. So you have commenced the audit of Atika, a company involved in importation and sale of plumbing materials. As part of the audit, you have noticed the following. Atika does not pay its suppliers in Germany through the bank. It relies mostly on black market for the transfer of funds. Please, Eben, kindly follow what we are doing on the screen here. Please, I beg you, do follow what we are doing on the screen here. Please pay attention. Even if you can't see, you can hear me say it. All right. Okay. So it says that Atika does not pay its suppliers in Germany through the bank. It relies mostly on black market for the transfer of funds to its suppliers. Does this thing ring a bell?
Yes, sir.
All right, let's move on. Point 2. Atika only sells its goods in Ghana. No problem. On March 25th March, all right, within the audit year, there was a cash deposit of $2.5 million into a forex account of Atika. Now, Atika only sells its goods in Ghana. Atika is depositing $2.5 million. Does it communicate something to you? Ghana, you turn idea in dollar.
Oh, see this.
So I hope it speaks something to you. Okay, no problem. On March, the company transferred the following: 499,999.99 to an unknown account in Cameroon. 399,999.99 to an unknown account in Kenya. The same 499,000 to an unknown account in Niger. 250 to a personal account of the managing director. 150 into please, what is that? What do you see here?
See,
Layering.
That is layering.
All right, good.
Yes.
All right, that's fine. The company's general ledger shows a revenue of, it's interesting. So this question, the name bonus pound, sincerely speaking. The company's general ledger shows a revenue of 1.56 million Ghana cedis. Their general ledger revenue, the import documentation shows the purchase of 36 million Ghana cedis. There is no evidence of payment of this, payment for these goods in Atike's bank account. The closing inventory amounts to 2.145 million, 200 in the ODN. Now, this is the question. This is your question. And it is 10 marks free of charge. The auditor has raised issue of money laundering considering the nature of the above transaction. Now, you see, the person has started writing placement, layering, and integration already. Explain to the team of members the various stages in money laundering and show how the above transaction confirms the engagement, confirms the client's engagement in money laundering. So you are going to explain placement and pick something that is happening here to use as an example that this is placement. Then you explain layering and use something in this to explain that that is what layering. The last one, what is the last one? Integration. And use something in here to actually confirm that there is integration. Then the last one, what are the obligations on the firm for money laundering? I think that one you can close your eyes and tell me, because the same thing I did to you, the same thing I did in the night before you people went to write the exam, the same thing. So whoever did this, whoever joined that class that night, I mean, that thing was a hallelujah for you, unless you weren't paying attention. Now, so placement, who can help us talk about placement? And I gave you some examples of placement. Who can help us explain placement? I'm done with money laundering. No? The next thing I'm going to go into will be the auditor's liability. So this is just a test case to verify that you actually understood what we did. What is placement? What is layering? What is integration? And what in this case that you have can give a signal that, oh, they are doing placement, they are doing layering. Now, watch this. Listen to the question so that you don't get yourself confused. Explain to the team members the various stages of layering, money laundering, and show how the above transaction confirms that the client is engaged in money laundering. So if you don't get an example of placement, at least you get an example of layering. If you don't get an example of layering, you get an example of placement. It doesn't mean by force when you actually layering it there. Also in your BB finching, because not everything here communicates placement, and not everything here communicates layering, not everything here communicates integration, but everything here communicates money laundering. And you know the 3 stages. So you should be able to say something, whether you like it or not. So yes, is somebody giving it a try? Yes, Ejapaye. Am I mentioning your name correct?
Yes, please, Ejapaye.
All right, let's go. Hey,
Okay,
I
so
enjoy yourself in Christmas. What party be I say, Anna?
Sir, sorry. Maybe I'm on environment.
No problem. I can send you my Momo account since you are enjoying the data.
Sir.
All right, you can
Okay,
go ahead.
sir, please, I'll take the first stage. That is the placement. So placement is whereby the entity that has involved itself in the illegal activities to generate illegal money uses other means to hide the source of the illegal funds.
Are you explaining placement or you are explaining money laundering?
Please placement. So they transfer
okay.
the illegal money into the business account in order to hide the source of the illegal money. So the example we can see here is actually the bank trades in Ghana cedis, but it made a deposit of US dollars, 2,500 US dollars into the forex account of Artica Limited. So that's what I will use as my example for placement.
Yeah, as they are placing the money. Yeah, it's just that as a potency of the way you explained it. But it's good. It's good. It's good. You pass with that. I mean, if this thing is 10 marks, I'll give you six marks. You are fast. Yes, anybody else? Please contribute to anything I'll join in class. Contribute. You want me to mention names?
Sir, please, the point 3, which
flow.
says that on 25th March, within the audit year, there was a cash deposit of $2.5 million into the Forest Bureau account. This is an example of money laundering under the stage of placement, which says that
hey, you have vanished. Abdul.
Hello.
Yeah, it's like you went off. Fatal.
Okay, yes. I'm saying that the
my,
point 3 is an example of money laundering
under
the stage of placement.
Yeah.
Yes, and the placement says that when a local currency is being changed into a foreign currency and being deposited into a bank account in order to reduce the sum of the money into a smaller denomination.
Let me ask you guys a question. Why do you think the examiner added the date of 25th March into the question? Why do you think? And the second one, the fourth point, 30th March. Why do you think? And stated emphatically that it is the audit year. Why do you think it's important?
So it is talking about how the money got integrated into the account or into the economy.
The date. I'm concerned with the date. Can you develop something out of the date?
So the date shows the time when the transaction took place. Okay, so that is when the US dollar, that is $250,000, when the money was taken and the deposit is being done to the various countries. So at the end of the period, which is the 30th March, that is when the various countries have such balances in those accounts for their transactions, so that they will not detect that they are into money laundering.
So that is confirming there. Ejapa, your hand is up, or you are the one who is speaking?
No, please. I was saying the date shows that after they got their illegal money, that's the 2,500 US dollars.
2.5 million, no?
2.5 million US dollars after they got the illegal money, and they transfer it to the foreign account of that company. In order for them not to be seen, that the 30th March signified that they went to take the money, that same money again, then they transferred it to different unknown accounts.
Yeah. All right. It's very important that when you are answering these questions, you spot these things. It's very, very important. Now, I think that the thing you've already know that this is a cash, what do you call it? A Ghanaian person who sells the thing in Ghana cedis, and getting that amount of dollar raises a question. All right, so that is that. And again, you saw that their general ledger account for revenue showed 1.56 million. How can you have revenue of 1.6 million? Or the infant say 2 million Ghana cedis, yet you are depositing $2.5 million. You see the currency, it tells you. And I told you that one of the things is that know your client and know the sources of his revenue. All right. Now, my client is selling in Ghana. His revenue is 1.56. How come that the person is having $2.5 million? How come? This one, they are just trying to give us a picture of Cecilia Dapao. If you pay attention. If you pay attention, that's what they are trying to give us. Am I lying? All right. So basically, those are the things that you spot. They have closing inventory, which means that in fact, they've not even sold much. Have you seen the closing inventory is 2.1? They've not even sold much. They have a debt of 36 million Ghana cedi to pay, but there is no evidence that they've even paid the money. Yes, Rosemont.
Yes, sir. So please, I did not get the explanation for why the examiner used the 25th March. Is it that the financial statements are supposed to be presented?
No, it's not about financial statement. It's about the timing they did the deposit and the timing they are spreading the money. Okay. 25th, 30th.
Okay.
Yeah. So that is that. You know, I told you that the person to place the money is an issue. So now he places 2.5 million into a Forex account. All right. There was a cash deposit. Where is the source of that deposit? Knowing that people will raise questions. Now, Attica is now transferring monies to various places. Cameroon, Kenya, Niger. And again, he transferred 250 to personal account of the managing director. Managing director no service ben or providing my company. So I mean, the key marks is under your ability to explain the 3 stages of money laundering. Okay, you're able to explain that. Kudos, you are fine. All right. Then you link up issues in the case to actually explain why you think there is money laundering. Then it says that what are the obligations of the firm for money laundering? Please, that one, close your eyes and say it. Let me move on to the next thing we want to do. Close your eyes and tell me, please. Fast. Who is talking? And you know, fast. Oh. Who is talking? Let's go.
So,
let's go.
Okay, I don't know where it's correct, but the first thing I was saying, the entity has to appoint money laundering reporting officer and train its staff to notice suspicious actions.
No problem.
Customer due diligence, knowing what the kind of business your customer is involved in.
Yes.
And also knowing the source of his money.
What else? Please, there are plenty of things. Oh.
They shouldn't
you can
give
talk of the National Crime Agency.
National Crime Agency,
So report to the externally to the regulators.
All right.
Sir, please change by change.
One area or kasa na ISNA na tekon. And I'm in mommy internet in. Is it like that for everyone?
Hello?
Yeah, I'm here.
Yeah, I was saying that they shouldn't give any tip off to the client.
Okay. Yeah, I think those are things we have discussed. So those ones shouldn't be a problem. All right. So that is that. So you are saying these things, these things you are saying. And then I will hear the idea 4 marks free of charge. Then you explain this thing. We explain you can one fan link it to the case where I'll be mark taka. So who says you can pass? You can pass. All right. So that is that. All right, please, any question, because I'm done with money laundering. Then let's go to auditor's liability. So objective 1 today is gone. This one is gone. We are coming here. The main job is here. So this one is, we are coming here. All right. Now, let's now come to professional liability. Professional liability. Now, what are we looking at professional liability? Please, it's also called auditor's liability, like I said before. A buyer check and expect this one. A buyer check. Now, what is this thing about? What is it about? Now, auditors, we all know, it's like they are superiors. It's like they don't owe anybody responsibilities. Like they do true and fair, not true and fair. They are gone. Nobody holds them accountable. Nothing. So now, the thing is that the truth is that the auditor can also be prosecuted by authorities. For all those of you who don't know, when the Capital Bank, there was another bank behind Amirefini. Is it Royal Bank? We had Royal Bank,
Yes, there's also the UT.
Yeah. We have something like that. And I remember ICAG sued, fined the Deloitte 1 million Ghana cedis.
Yes.
When the thing happened. Yeah. So those are the liabilities that we are talking about. The auditors too can also be hit hard with in terms of criminal and civil. They have criminal and civil liabilities. Criminal and civil liability. Now, criminal liability, the any nine saying they do kotupi, and then they do konsawemuno. All right, but when you talk about civil liability, that one is just about when a person suffer losses and you have to kind of pay some things. Now, the question is that who are the auditors liable to? Who are they liable to? Now, you have to understand who employs the auditors. The auditors are employed by the shareholders as a body. So the auditors employ the shareholders. So you will know that, number one, auditors hold responsibility to shareholders, those who employ them, to shareholders. Then they also owe responsibility to what we call the third party. They owe responsibility to the third party. Now, when it comes to the shareholder, every liability towards the shareholder is automatic, is as it is. It's automatic. You obviously have responsibility towards the shareholder. Because on our and if you were here the first day we met, you learned something called a fiduciary relationship, whereby one party holds the duty of care to the other. So that is that. But that place is not the focus of the exam. The third party is the focus to your exam. Now, the thing is that the auditor also have a duty of care. At the time they are issuing their opinion, okay, they also have a duty of care to the third party. That one too is true, because if you issue your opinion, I can always also count on the opinion to do an investment activity, because you said the financial statement is true and fair, so I can actually count on it to also do an investment activity. So at the time the auditor is issuing his opinion, there is a duty of care to the third party. He owes duty of care. As a matter of fact, he owes duty of care to this person too. So let me do it like this. Let me just do it like this. Duty of care is present here and it is present here. All right, so that is that. Now, the duty of care to the third party is sad that the auditor actually knew when he was giving the opinion that this third party will rely on it. So it is because of reliance. The third party will rely on it, reliance. And that he will actually use whatever he wants to, the opinion of the auditor, the third party will use it. But this one, whether you will use it or not, It's automatic. So here we say it's what? Automatic. But here it is to the extent that the auditor actually knows that the third party will place a reliance on his opinion. All right. Now, then we talk about negligence. If the auditor is negligent to this one, okay, this one too is automatic. All right, it's automatic that he can sue the auditor for his negligence. But this one, the third party has to prove that the auditor, it has to be proven that the auditor actually was negligent to his responsibility. And the third one is that it's a loss, suffering of losses. Did he suffer loss due to the negligence? This one is automatic. This one has to be proven that, oh, I suffered loss because of the auditor's action. So here is kind of automatic because he should know that the person will place a reliance on it. All right. Then here, the third party has to prove it. The third party has to prove it. All right. So that is that. Okay. So that is what you have to know. Okay. Then now, the question is that, how can the auditor reduce this liability? How? How to reduce the liability or clear off the liability? How do you deal with, as an auditor, how do you deal with this? And please, if it is coming in your exam, this is the part that is coming. The possible solutions to the auditor's liability. It's very, very simple. Very, very simple. Number one, you can issue a disclaimer. Please, what is a disclaimer? What is a disclaimer? So the disclaimer is saying that, this opinion that I've given is just for the shareholders only. Whoever will use the audit report and is not a shareholder is doing that thing at his own expense. Please, did you get that? Please, did you get that?
Sir, please come again.
I said a disclaimer means that the auditor is saying that my opinion is just for the shareholders only. Whoever will use that information, my opinion, aside a shareholder, is doing that at his own danger. Did you hear that?
Yes, sir.
All right. Thank you. Now, so that is what we call a disclaimer. If you go to any bank, the next time you walk to a bank, what's their wall? There is a financial statement posted there, audited financial statement. Read it. Read, there is a disclaimer always down there. Read it. All right. So that is that. Then, another point, this pen keeps freezing. Another thing you can do is to become a limited liability partnership so that if there is a liability, the liability will only be limited. Okay, because audit firms actually started as unlimited liability. So they were all partners that only. So those things you hear, Deloitte and Touche, PricewaterhouseCoopers, KPMG, they are partners. So it's not a company, it's a partnership. So you can decide to do, you become an LLP, limited liability partnership, so that you remove the unlimited liability, okay, from your personal, as in the personal self. It will be limited to the partnership, how much you have contributed as your capital. I think you've done company, so you know all these things. These things are, I mean, just commonalities. All right. Then you can also become a limited liability company, so that you form a company, limited liability company. So that you form a company and the liabilities will be limited to the company, not you, the individual. All right. Another one you can do is to do a government set liability cap. Liability cap. What does this mean? This one, you set a maximum amount you can be sued for. A maximum amount you can be sued for. So you can't sue an auditor for more than 1 million Ghana cedi. You can't sue the auditor for 2 million Ghana. So you put a cap. There's a limit to how much you can sue auditors. All right. So that is that. Then another one is what we call proportionate liability. Proportionate liability. What does that mean? This one means yenche proportionate liability. Yeche. What fault did you commit? So the liability will be split into proportions of wrongdoings. You will split it into proportions of wrongdoing. Who did wrongdoing A? You pay this. Who did wrongdoing B? You pay that. I hope that one is understood. All right. That is that. Then you can actually decide to do due diligence to take you off all this liability. Do your work well. If you do your work well, you are off all these liabilities. But that is the lender of last resort. I don't tell students to write that as their first answer. The next one I want to talk about is insurance. Insurance. You can insure because BCI insurance. When you insure, you sue, then the insurance pay. We call that one professional indemnity insurance. Professional indemnity insurance. PII. Please, all these things are in the manual, the ICAG manual. They are all there. And those who also bought the book too, they are all there. It's not like it's not in your note. There's also another one called fidelity guarantee. Fidelity guarantee. All right. What is fidelity guarantee? This one.
Sir, please, page number.
Oh, me, I can't keep those things in my head.
47.
In the book.
47. It's 47.
Okay, thank you.
No, the 47 he is giving you is in my book I wrote. He bought. Meboa. And is the ICA one that is page 47?
No, from your book.
Your book.
That one I will know.
I have your book. I have your book.
Oh, okay. That is page 47. I thought you were saying what page is in the ICA book.
No, please. Thank you.
That will be our question in the next power. All right, no problem. Anyway, so there's something called fidelity guarantee insurance. Now, what is fidelity guarantee insurance? No, that one is about when somebody, so if you have a partner in your company, an audit firm, and the partner actually does the fraudulent activity, or let's say an employee, you call the company, you do company in the office, all right, so you can actually do an insurance to cover that too. But come on, you see, these things we learn in book, but does it make sense? Say you are going to insure yourself to the extent that the audit team, your core baby, no there, the company will be the company will be indemnified. Come on, how bad? Yeah. So please, so the lender of last resort is, and please, that one don't go and write it as your first answer. It's the lender of last resort. You said that they should do due diligence and quality work. All right. It is a way to say that when you do that thing, you will not have a liability. So please, you can add that. In fact, I don't like adding it, but you can use it. All right. It is when you don't have any answer to write. That is when you write those ones. All right. So that is it. Ladies and gentlemen, that is it. So if you look at the past questions, okay, if you look at the past questions, so go to the past questions. There are so many questions under, I think November 20. So look at this. Look at this, November 2015. You are responsible for providing direction to a major junior members of audit department in your firm on technical matters. Several recent recruits ask for guidance in the area of auditor's liability. You are keen to understand how an audit firm can reduce its exposure to claims of negligence. They have also heard in some countries it is possible to restrict liability by making a liability limitation agreement. We talked about this, right? Liability limitation agreement, the government cap. Explain 5 methods that may be used by an audit firm to reduce exposure to litigation claims. Please, can you give me 5? We've talked about 7 right now. And they've singles one of them out. So can you give me the remaining 5?
So you put
Limited
a disclaimer.
liability company, limited liability partnership.
Akwane di Baba, it's okay. It's okay. It's okay. Yeah, it's okay. When you go through the part, but please expect this thing in your exam. Auditor's liability.